Hey traders, Akil Stokes here with this week's Live Room Weekend Review. If you're one of the many subscribers and free subscribers, I guess, that view this video each week, I want to thank you as always for tuning in. If this is your first time, well, I hope you enjoy what you see. The rundown through this week is pretty simple. We're going to start off by talking about what I consider to be the trade of the week. We're going to go into some of the things that's been happening in the syndicate, and as always, I'll end it with some flashbacks from our live room sessions. Now, for those of you that have been following me on Twitter or Facebook, you know that I had a pretty interesting weekend. I had a trip out to Ohio, which is about a 6-hour drive from where I'm at. So 6 hours out, 6 hours back, and well, on the back, the bus broke down in the snow, and got home pretty early this morning. And one of the things that I mentioned, I had a whole plan. I had this real estate book. I'm pretty big into real estate for you guys that don't know. I said I had 12 hours on the bus, plenty of time to read it and really put some work into the book. And I forgot it at home, of course. Luckily, I always keep my Trade What You See book with me, so I had times to read that over and over again. And Trade What You See by, I think it's Larry Pesavento, is a very good entry book. And I got a lot of questions about that. And yes, I do recommend it. Scott Carney's good, Harmonic Trading 2. But if you're new to trading and you want something a little easier as far as basic structure and patterns and stuff like that, Trade What You See is the book you want to check out first. And it's funny because reading that book really worked right into the I guess the theme of the week, which is just knowing the basics of how to read and analyze a chart and price action. And even talking to Jason, what I realize is so many people, they come into trading and the first thing they want to know is how do I trade this pattern? Or basically, what can make me money right away? What can make me money the quickest? I don't care about the basics. I just want to know what can I trade so I can make profits right away. And that's really the wrong way to go about it. And don't get me wrong. There's nothing wrong with just trading advanced patterns and stuff like that. I do it all the time, obviously. But you really, again, unless you know the basics, unless you know how to read price action, the ebbs and flows of the market, unless you really understand market harmonics and structure, you're going to get yourself into trouble. Because you won't know how to do basic analysis, and that basic analysis again can keep you out of a lot of bad trades and put you into a lot of good ones. And that's a topic I can go on forever. So, but I'll stop it right there. But know the basics, guys. Really learn how to read a chart, and I guarantee it's going to help you trading a lot. And that kind of goes right into the trade of the week. Now I'm going to bring over, pound dollar. And this is a trade we were watching in the live room. I actually didn't get a chance to put this out to the syndicate members, which I feel kind of bad about because, well, we've been having some bad luck on the minor crossover pairs in the syndicate. But I'll get into that a little bit later. But we're looking at pound dollar. We were watching this for a while, and an area that we pointed out and we really had on our radar was this area right here. And I think we were down on the hourly. We're looking for a butterfly to complete it here, and it broke right through. But again, just knowing the basic price action and reading structure, we knew that once this area was penetrated, once price action broke and closed below these lows, first of all, the chances are that we were going to continue down. But even more so, we were most likely going to see a retest of this area before continuing down. We had some fibs and lines down at this area. I think I just drawn a few for you. You see we had a 618. Fibonacci retracement. Let me see if I can take a Fibonacci inversion. 618, 127. We had a few fibs there to kind of anticipate and know where the market was going to turn around at. But here's what we saw as we scroll down the charts. Again, we are looking for this level right here, and I'll draw a little red horizontal line so we can see it. Looking for the market to retest this level, and we waited for weeks for this. But you're patient. And actually, in the middle of this, we saw a cipher pattern that completed. Now, it's going to look a little choppy now on the 4-hour chart, and I may have to go down to the hourly. But let's go down to the hourly first, actually, because it's really hard to see here. We're looking for a cipher pattern like this. Remember, and this red line is the line we were waiting for to test. But we saw X to A to B, B to C, and we actually had a C to D completion right around here. Right around there. So let's bring in my Fibonacci retrace and see where our 786 is at. Right around here. And you can see our cipher pattern hit it, hit that again, hit that area we were looking for already to complete, hit it, and rolled right over for a nice looking trade. And again, something looks off about this. I think this is the right one. I had on my thing, yeah, this is the right one, cipher pattern right here. So you can see combining, although it was an advanced pattern that got us into the initial trade or the actual trade, being able to read structure was able to, give us that real area that we thought the market was going to complete at. So we already had this area on our radar and using that advanced pattern basically just as an entry technique. So again, using, both those knowledge bases together allows you to get in the best of the best trades. Now, speaking of the syndicate, haven't had the best of month. January was pretty rough, and I was talking to a trader in our mastermind program saying that a lot of these patterns are busting out. It's it's a bad harmonic month, whatnot. And what he did was he sent me over a chart saying, hey, well look at all these patterns that completed and rolled over, and there actually were a lot of patterns. And one thing I noticed was that there wasn't a lot happening on the major pairs, and I consider there to be about 10 major pairs. And actually, the patterns we had on the major pairs completed rather good. And this Aussie dollar bat pattern that Jason posted this week was a good example. Looking at X to A to B, B to C, C to D completed down here. You can see we hit target one. But a lot of the pairs that broke through, whether it be cipher patterns or Gartley's, were on the minor pairs. So pairs like Aussie Swiss and Aussie CAD and Pound CAD and Euro CAD, and I feel like I'm picking on CAD, Pound Swiss, stuff like that, not the major pairs. And I had to talk to my live room members about this, where it's, this just proved the importance of having a set portfolio and sticking to it. You don't want to be that trader that looks at 25 pairs and wants to trade everything on 25 pairs. It's a lot easier for your analysis sake, and a lot easier as far as calculating your max drawdown if you pick out maybe a handful of pairs, maybe pick out between 6 and 12, somewhere around there, and only trade those 6 to 12 pairs. Because in months like this where maybe the patterns aren't completing like you're used to, and you start getting a loser here and a loser there, what happens is, well, you start searching for pairs. You get that revenge trading mindset, and you're like, I got to look around for something. Let me look at New Zealand Swiss or Pound New Zealand. And you start looking at pairs that you normally wouldn't look at. And, well, when that happens, you take trades you normally wouldn't take, trades that weren't necessarily in your back testing, weren't necessarily part of your maximum drawdown, and it just creates a downward spiral from there. So although I'm putting out trades, I'm I want to give syndicates something to learn off of. Want to have them, give them a look at these trade opportunities. But it's important that you trade your own portfolios. Stick to the pairs that are in your portfolio. Stick to the pairs that you back tested, or stick to the pairs that you decided you're only going to trade. And that's going to make your trading life a lot easier. So that's about it. Again, I want to touch on the trade of the week, the importance of knowing the basics. I want to touch on the importance of having a set portfolio. And what I'll do now is give you a look back at how the live room went. Check out the written review. If you're watching this on YouTube, go over to the Trade Empowered site or the Ratio Trading Mentor site, RatioTradingMentor.com site. Check out the written review. That's where I'll have some more details about how we actually did for the month, as far as pip wise, percentage wise, and stuff like that. But enjoy the live room recap, and I'll see you guys next week. So Monday started off pretty slow in the live room. Tuesday, I should say, started off pretty slow in the live room, but we did end up having a few trades. I think we ended up entering 3. We had one winner earlier, one advanced pattern loser earlier, and we ended the session with our trade right here on Euro Yen. For some reason, and I still don't know why it happened. We saw a big rally out of a lot of these pairs. And well, we rallied right up to, you can see, one of our major and minor DSR levels, and came in to put in a nice double top. So we got short. Now the thing about this trade, because of the rally, the ATR of our candle, which is, I use ATRs to help project where my stop losses should go, was extremely large, giving us about a 50 pip stop loss, along with not too good of a fill as well. And what I told the traders is, this is where really managing your position comes in handy, and being able to smartly trail stops. And as you can see, and I'll get rid of this real quick. As you can see in the market, we came down, created some new structure, and finally broke and closed below our initial double bottom. So what that allows me to do is take my stop loss from up here at 122.70, which again was about 50 pips away, and roll that further down to about 122.47, right above these structure highs. And as we continue to create lower lows and lower highs, well, I can just keep rolling this thing down and down, keeping my potential reward the same while limiting my risk. And that's smart trading. That's smart trading. Because even if this thing does come back and reverse, well, now instead of losing 50 pips, I'm only losing 20, which is a big difference when you think about it, trade after trade after trade. So Wednesday was a day full of a lot of choppy action in the markets. We had some pretty big impulsive moves right after our session started that kind of screwed up our analysis. So we spent a lot of the day on the range bar charts. And once again, I love the range bar charts as far as price action and structure-based trades go. Not necessarily for a lot of patterns, but they work really good, at least for my eyes, for identifying just the ebbs and flows in the markets. And we were able to catch a few trades in that direction. First was on pound dollar, and both of these were trend continuation trades, meaning where the market had broken a previous level of structure that we deemed to be significant. And well, we just, as you can see, we just waited for the market to come down, retest it. We used one of our entry techniques to get long, and we're in this trade predicting that our trend is going to continue and the market's going to push higher. Now for the pound dollar, we already had target one hit for about, I think, 20 pips. We took it off at a retest of structure here, and we have second targets sitting a little higher at, if I zoom out, at our next major structure level, which also happens to be at a 127 extension and a 1618 inversion. So overall, the level that we feel the market's most likely to reverse at next. Euro dollar was basically the same thing. We can look at it on the 5-minute chart, and again, you can see just the market's trending. We're pushing up, we're pushing down, we're higher highs, higher lows. We're just taking a shot at buying up when these higher lows comes at a good structure level, as we double topped here previously in the day. And again, trying to hop on this trend long. Now the difference with euro is on our higher time frame analysis, there's really nothing out there above this level. We're at a pretty significant point on the weekly chart, but aside from that, there are hundreds of pips of free space for this market to roam. So of course we want to be conservative with our first targets. So you see my first target is at the confluence point between a 127 extension and a 1618 inversion. But after that, what I told the traders in the room is, hey, we're going to go in and I'm going to go ahead and take my first targets off here. Second targets, I'm going to trail that structure. So if we do get one of those big rallies like what we've been seeing the last few weeks in the market, we do get a little consolidation followed by a big push up, we're going to have some money in the market to take advantage of that.